Hello guys, hope I am on time this Saturday, 27 April 2018. So today, for this session, we try to see how to be a disciplined trader. We have spoken a lot about discipline in our channel, and I give each time some information, but in this live we try to go into details and we try to speak about discipline in trading, which is not an easy topic because a lot of people, a lot of traders, they neglect this discipline, and the outcome is that they lose a lot of money, and sometimes they lose all their money without knowing what's going on. Hello wise men, how are you? I think you are the first to come today. Thank you very much for coming, and thank you very much for being here as always. So I will be just begin speaking about the subject until we see some guys come, and then we can begin with your questions, and we will answer them if God wills. So as usual, I receive a lot of emails, and some people, they think they are doing right. They try to find the best stocks, they put stop loss, and after many months they don't make money. So what's the problem? Is it the problem that the market is against them, as some people they will do? Someone tells me that whenever he buys a stock, the stock will go down. It means as if the stock is following this guy, and whenever he buys, he go against him. So this is the kind of excuses that most of the traders give in order not to be responsible for what they do, although the market is always there. Okay, either during the trading hours from 9:30 to 4 p.m., which is in the day, or before the market opens or after the market opens. The market has nothing to do with you. Okay, it's you who buys, it's you who puts stop loss, it's you who put money into the market, into the stock. So it's always your responsibility. It's not the market that that is responsible for what you do. Okay, if you make money, it means that it is you who have made money. It's not the market. Okay, the market is neutral. It does what the people they do. If in the day there are a lot of buyers, it doesn't mean a lot of buyers. Even if it is one buyer, but he is big, he buys a lot, the stock will go up. No matter what is the event, no matter what happens, the market is just reflecting what the traders are doing in the market. Okay, so he is always neutral. He gives the price that you see in his stock is just the combination of long buyers and short sellers. Okay, so the market doesn't interfere with you, or it stops you, or follows you, or it has nothing to do with you. Okay, so this is just one point that I want to make sure. And wise men said, market not against them, these emotions are against them. Yes, it's just the way you interact with the market that makes the money. Either you lose money or you make money. Okay, if you buy a stock today and it is a lot of short sellers and the stock is going down, don't blame the short sellers or don't blame anyone else. You just blame yourself not to do the right thing. If the stock is going down, either you don't enter, or you short the stock, or you buy put options. Okay, So it's up to you what you want to do in the market. It's not the market that tells you what you want to do, and they send you an email or someone send you an email, because no one knows what's going on in the market until we see the prices. Okay, and this subject of discipline is very, very important. That's why I want you guys to, if you have more questions about the subject of today, and we try to go point by point, and we see what does it mean to be a disciplined trader, in order in the future you can make money and you can be always with the trend, that either it is the trend of the day, which is when the stock is going up, or the trend of the stock, which is many days or many weeks or many months. This is the big trend that you are following, and if you are with it, you can make a lot of money. Or if you are an investor and you stay many years, this is the very, very long trend, and how the company is doing in these years. So it depends on you what you are doing in the market. So disciplined trader, the first thing which is very important, that most of the people they neglect, is to know what you are doing. Okay, if you, for example, if you buy a stock, just an example, if someone asks you what is the reason why you buy this stock, you should have a very good reason to buy. It's not because I was sleeping and I dreamed of a company and someone told me to buy a stock, and then you wake up and you buy stock. Okay, or I saw it in the news. Hello, Mustafa Ben Buzaid, how are you? You are new here, I guess. So welcome. So as you can see, the beginning of the thing, the first thing is to know what you are doing. This is the first thing you can begin with. And when we say what you are doing, what does it mean? It means you have a strategy, a complete strategy that you are following. Okay? Complete strategy. So I will just put this here. When we are discussing the thing, it will be very easy to follow. Okay, it's very easy to follow later what we are doing. Okay, so let's see here. Oh, it looks like too big, so let's put it small. Okay, so okay. How to be disciplined trader. Now the first thing I would mention is here, one, know what you are doing. Okay, sorry for that. Know what you are doing. What does it mean, this know what you are doing? It means you have what we call a full, complete strategy. Okay, so this is the first thing you can imagine. Okay, so know what you are doing, which is the full strategy. So when we mean by complete strategy, it means you have an idea about trading. Either you are doing day trading, you are doing swing trading, or position trading. You know what you are doing, and the strategy gives you here, it gives you guidelines. Okay, So it gives you what we call guidelines, okay, what to do in any situation. So this is one thing that you can think about it, okay? It's just the guidelines, what to do in any situation. And this is the first thing you can think of. So many times when the people are they begin to trade, they don't have a full complete strategy. What does it mean? It means they don't know how to trade in general. You can for example go online, YouTube, or you go to websites, or you go to a guru, or you go to have books, or you attend seminars, and you collect some techniques, and you just go and you begin practicing these techniques on your trading. Now this is not what we call a full complete strategy. A complete full strategy, it should be from the beginning to the end, what you should do in the trade, what you should do in your account, how to manage your money, how to manage risk in everything, how to do every right thing on the right time. So it's a complete thing. It's a lot of things inside one thing. But the professional traders, when you know, they reach this kind of thing, it becomes so easy because they see what they are doing and they can decide to do whatever they want at any time. And they know the consequences when they do this thing. I see people, they send me emails, and when I hear this, I remember when I was a beginner, it's the same thing. A stock was $10, now it is 5 cents, and the people, they are still buying it, and they think this stock will go up. And they don't know that this company may be going bankrupt at any time, and they put too much money. Okay? They don't know how the companies work, and they don't know that there is a big risk that this company disappear at any moment. Okay? But they just trade because they say, oh, it's a cheap stock, it's just 5 cents. So let's buy $10,000 or $20,000 or $30,000 from this stock. But they don't know that tomorrow it become 1 cent, and all these thousands of dollars they put in this stock will disappear. This is the market. So if you don't know what you are doing, you will have big problems in the market, because the market punishes anyone who doesn't know what he is doing. It's like you, when you are in a highway driving, and you have a very high speed, but the problem, you don't know how to drive. Now, what do you think it will happen to you? The accident is always an option. The first option you can think of is the accident. That's why people who are trading, they have always accidents. It means they lose a lot of money without knowing why. Although they know that they don't know how to trade, and they can get a training, or they can practice more and more and more, and don't put too much money until they are confident they understand what they are doing. So this is the first thing I am speaking about, is the full strategy to know what you are doing. Okay, let's go and see some guys what they are saying. Sorry, I will be drinking some coffee as always. You always see me drinking coffee, so it's a habit. Trump said, Janet Yellen said, we will not have bear market anymore. Do you buy that? See, Trump, I don't know who is this Janet Yellen. If it is a bear market or it's not a bear market, I told you before, Trump, that I will show you when we are in a bear market. We are not in a bear market until we see some signals. The people, they just talk. For example, if I tell you now, it is not a bear market. This is about now and the past, what it happened. In the future, no one knows. So we are waiting until we have more confirmations. And I have showed you before Trump my confirmation and my signals. I said, when the market goes down, the support line, and it's going down, we begin to think that the market is going to be in a bear market. But not yet. So this Janet Yellen tells that we are not. All the people know that we are not. Okay, we are not. Now we are not. It's just because it is not shown that much. But there are some industries that they are really in a bear market. It means they go down, they cross the support line, they are going down. But fortunately, there are some industries that are going up. Okay? And they are doing good. And this is the market. The market is moving, it is filtering all the industries. And you say, do you buy that? Buy what? I'm telling you that there are some industries that are going down. If you buy those industries go down, they are in bear market. They are going down and they cross the support line and they are losing too much money. I see it every day. And in this week I will show these industries to my golden subscribers. I will show them these. At least they will know what's going on in the market. Okay? So when the people speak, they can't control the market. For me, I don't speak about the future. I'm telling you, I speak about now and in the past. We are not in a bear market yet. But some industries are in bear market. Some industries are going up and they are good. That's why if you use my search, you will find a lot of stocks going up and it's very good. Now, Trump, hey, Djellala. Hey, Trump, my name is Karim, not Djellala. And my business name is Djellala, with L, not with B. There is no B in my name. So please check. So, Albert's suggestion, how are you? Hope everything is good for you, Alberts. Wendy Casa, how are you? And I just saw your names. Welcome to the live session, and thank you very much for coming. So Albert's suggestion say, have you lost a lot of money after you started your new trading strategy? Which my new trading strategy? I don't understand. Well, what is this new strategy that you are talking about? I don't have a new strategy. Oh yes, no. At the beginning, when I was trading, I don't have strategy. When I first began and I lost money. Oh, it means what I teach? No. What I teach, I always make money from what I teach. Okay? When you buy a stock according to my criteria, they go to a trend, you will be making money for sure if the stock trends. But if you buy a stock that doesn't trend, you should just exit. That's it. Because you can't be against the market. You can't oblige the market to do what you think the market will do. And this I always teach. This, what I teach, is called the probabilities. Probabilities of making money from a stock. And this is the math that goes into the strategy in order to make you understand that I just made a video where I showed when you have losers or you have winners, and you can take profit from them if you buy them again, if you exit them. This is what we call the old trades. For my golden subscribers, in this week I will make videos for them to explain into details how it works. Although I made a video on YouTube, it is a general idea, and they showed the general idea, and a lot of people, they know what to do. But I will give more details into golden subscribers with the examples and how they should do it. Hope Albert, you understand what I say. And here we have Ismail. Hey, I heard you in some videos telling that no broker shows commission, but they exist. Yes, they exist. When you want to buy a stock, before you hit submit, they will show you that you pay $5, for example, as a commission. But is there any tab that tells you each month or each week or each year how much money you pay for commissions? This is what I am explaining to you guys. Is your broker having a tab when you see how many commissions or fees, all the fees in one tab or button? No, it's not in their interest. Okay, it's not in their interest to show you how much how you do commission. It's the opposite. Okay, it's the opposite, where they invite you to do some strategies. They teach you about option, about futures, about stocks, about different strategies that you should do in your account. Now, what does it mean they teach you? It means they ask you to trade more and more and more. But understand that a broker, his job, it is not to trade stocks. He doesn't get his money from the stock market itself. He gets money from you. Because you trade, you do the risk, he doesn't do the risk. He does even ask you for your money that you don't trade, and he will give you interest rate. Let's say he give you interest rate 1%. But he will sell this money with 7 or 8%, and he will take those large profits from your money with interest rate. Okay? So hope you understand that. Kabuki Kappa, thank you very much. Please don't put stocks in the chat room, because I don't like to put stocks, and maybe people will follow you and short or buy long this kind of stocks. So please don't put. You can ask me about any stock, but you should not ask people what to do in these stocks. Okay? So hope Ismail, you understand. Another thing, Kabuki Kappa, we are not using Fibonacci 20-year replacement. Okay, we are not using any indicator. So please don't put information about something that we are not using here. Hope you understand, Kappa, what I am saying to you. And there is no need to put this stuff because we don't use them. And you have now put 2 kind of stocks. If you put the third one, I will take you out from the chat. Okay, understand that. Now let's go. And you say, Albert say, Karim, ENTC had a gap up on Friday after an excellent earning report. The price went up 10% before the market, but when during the day it went further down to negative. Why? Any explanation? Okay, I will just try to see this stock since you ask about it. Okay, INTC. Okay, let's see. So we see that Intel Corp It opens at $55.41 and it goes down to 52.23. Now when you ask about this, so there is a gap, as you told me, there is a gap up from, it was 53 and it goes to 55. It's just $2. I don't see that much. $2.41 or something like that. And then some people, they short. Let's see. In the Dow Jones, it goes down a little bit, not that much. But let's see if it is all. It's all the industry, yes or no. So Intel, it's in electronics, in semiconductor, broadline. This is the industry. So let's go to the industry and check what's going on. So it is in electronics as a sector. And it is semiconductor broadline here. So try to see this. The industry today has been going up, as you can see. It means most of the stocks in this industry is going up. It means there is the problem is with Intel itself. Okay, which is today they short sell it. Now you ask me why. It depends on how many people are shorting the stock. It's the same as this candlestick, or this candlestick, or this one, or this one. It's just short sellers who are shorting the stock. Okay, and the stock on this stock is doing so good from the past. Now it becomes volatile. You can see that this stock here, it has a gap up here, it's going up, a gap up, it's going down, a gap up here, and it goes down. So the short sellers, we have a lot of short sellers. Now, if you can see here, from this section here, you see here that this Intel Corp is a stock that it is going so good with the small candlesticks. It means we don't have a very large what we call short sellers. But after that, things change. Here the stock will become so volatile. As you can see, this period here, okay, from here to here. So you see the candlesticks are going up and down, up and down, up and down, up and down. It means they don't form a real trend like this. See how good is this trend until here, and see how bad all this from here to here. So if you ask me why the stock goes down, it's just because we have short sellers. It doesn't mean that it has a gap up, it will continue the gap up. Okay? So like here, for example, this one, we have a gap up, but the short sellers come the next day and they begin to short it. But today, in the morning, we have a gap up, but it was short until the end of the day. So the reason is that people are shorting the stock. Because day traders, when there is a gap up, they begin to try to push it down and see if they can go down. If it is strong, they can't do nothing. Like here, like this one here, they can do nothing. The gap up was so good because the people are very strong. They buy. Today or on Friday, the buyers, they are few. It means when they see maybe a gap up, some people were selling. And the short sellers continue and they get hit. And this is how the market works. Okay? So Wendy Casa said, how do you know the volume versus big buyers versus pump and scam? Okay. Generally, when we say big buyers with volume, it means most of the time the big buyers, they go where there is a volume. A stock that has volume, when you buy a lot, it will not be seen. Okay? But if the stock is small, it has a small volume, anyone can put damage to it. It can be put up or it can be put down. And I will, Wendy Casa, I will just show you an example of the scam, the pump and dump scheme scam that you show here. You told me what's the difference. Okay, I will show you by the explanation. Okay. So here is the deal. Now, if you take, for example, Facebook, just an example, okay? Now, let's say we have 45 million shares traded a day. Do you understand? 45 million shares traded a day. Now, if a big guy, like a mutual fund, for example, he buys 10 million, does it show in this Facebook volume? No, it doesn't show, because the stock is always having big volume. If 45 you add 10, it becomes 55 million shares. It doesn't change that much in the stock, but either it go up or it go down depending on the person he is selling or he is buying. Okay, so you see that. So Facebook always has a big volume daily big volume, always daily big volume. Now I gave you another example, another stock, a stock that it is $1. The volume is 10,000 volume only. 10,000, it's very small. Now if a big guy comes and he buys, this is 10,000, okay? He buy 100,000 only. I'm not speaking about millions. This $1, okay, let's say this is $1, can go to $3 in the day because of this $100,000 volume added to this $1. It goes to $3. It's just because the volume changes suddenly from 10K. It becomes here 110K. It means 110,000 because this big guy has bought a lot. But understand that because the stock is so small, anyone can move this stock easily. That's why there is scams. There are some people who can pimp this stock by asking people to buy, like in the media, like in the TV, or like in websites or whatever. They can change the volume from 10,000 to 100,000 or to 1 million if they want, or 5 million. Okay, I will show you some examples when this happened, and it's like this. Okay, so big buyers, most of the time, mutual funds, they go to bigger stocks when we have a volume. They don't go to smaller stocks. Because if they begin to buy millions and the volume is only 10,000 or 20,000, 100,000, all the people will see it. The day traders, the people who are scanning the market, and they look that there is a huge volume coming from one stock, they go to it and they check that the stock is going up. So all the people, they come there and they try to buy it. If the stock is going down also, it shows a lot of volume down. They go there and they see what's going on. Is it going up or going down? Because the volume doesn't tell you. Because the volume, we have buyers and sellers. Okay? So it's not only buyers or sellers only. So this is the idea. This is the idea about volume, about pump and dump scheme. Okay? This is how it works. But understand that a stock will go up. It's because some people, they buy. They buy more than usual. If the stock is going 10 cents a day, and then one day it goes $2 in one day, what does it mean? It means that the volume of buyers is becoming big and big and big, and there are a lot of people who buy. Now, don't try to understand why the people buy, because this is a secret. Like you, for example, when you go to buy a stock, okay? No one will ask you each day why you buy the stock. Or if you go and you sell a stock short, you short a stock down. Does anyone your broker send you an email and say why you short this stock? Or why you buy it on this time? No one will ask you. That's why the market is a secret. Everyone is doing what he wants to do. It's like a large democracy where the people who have more votes, it means more shares to buy, they will influence the market. If they sell short, the stock will be going down. If they buy more, the stock will go up. This is just as simple as that. And this is the heart of the economy in the world. This is called supply and demand. Okay? When we have a lot of things, one thing that it is a lot in the market, and all the people are selling the same thing, the market will be going down because there is a pressure on the market to go down. But if there is something that it is scarce in the market, let's say gold, when you want to buy gold, just an ounce is $1,300. But an ounce of sugar or an ounce of coffee is not $1,300. So you understand the idea? It's just because of the value that the people give to this one. Thank you very much for your questions. Let's go to a question with Wiseman. He said when a stock you buy doesn't go up very much, then it hits your stop loss, but then goes up again weeks later. So then you buy the stock again and you exit again in very short amount of time. No, you don't exit in a short. Why you exit in very short time? This depends on what will happen in the future. Let's say I will just make Wiseman. I will make just a chart for you. I just show you how things work. Just the idea. So you bought the stock at $20. This is $20. This is the green. It means the buy. Now you put a stop loss. Stop loss. Let's say it is $19. Just an example, okay? So the stock goes one day or two, and then it goes down and it hits your stop loss. Now let's say today is 18.50. So what if the stock comes back again in few days, 1 week or 2 or 3? The stock will go up and crosses your buy. So when it is in your buy, you should buy it again. Buy second time. Buy second time. This is the buy the first time. First. Now, and then you put the same stop loss, 19. Let's say you bought it at $20.05. Now, if the stock continues to go up, that means that the stock can trend. And this is why we buy it again, because we think that if it comes again, it has a trend before, it is trending, and then it stops trending. It goes down like a small, this is like correction, like a correction. It could be 1 day, 2 days, 3 days, or whatever days, many days. Then it goes up again and hits the buy purchase, and then it continues. Let's say now it is 30. So why you have bought it again is just you think that the stock can trend again. But let's see the stock has gone down, hits your stop loss again. Here in this idea, you just forget about this stock because it might not go another time to 30. It means it might not go, and you cannot just follow this stock because you do the first chance, second chance to a stock, and then you forget about this stock. It might be going 2 months or 3 months down. Maybe it goes up. Maybe it's continuing to go down. So don't forget about this stock because you are just wasting your time. Okay? So the second time when you buy, it's not for a short time. It could be for a very long time because you bought it here because you think there is a trend. Now, if you don't think there is a trend, why you buy it? It means if you buy it at $20, it doesn't trend. Okay? If you don't think that it will trend, you don't buy it the first time, you don't buy it because you think that it doesn't go and it doesn't go to trend and to become a big stock. So you should think about your first buy first. And this is the probabilities that will happen in a stock. Okay, sorry for that. I was explaining without putting the thing. I will do a thing again. I'm sorry. I was explaining and I think I didn't put the thing. Let me make sure it's, yeah. Sorry you guys. I was explaining and I didn't put the thing. I say if it is $20 you bought it, this is the buy. I just explain again. This is your stop loss. Let's say it is $19. Okay? So the stock goes up and then goes down and hits your stop loss. It is going down. So what you should do in this situation, you are out, you take this stock and you put it in a portfolio. Okay, put it in a portfolio and you wait. If the stock is continuing to go up again to the buy thing, you buy it here the second time. And if it's going up, it means you succeed to make money from this stock because you buy it at 20 again and then it goes to $30. Now, what if the stock doesn't go up a little bit and then it goes down again and hits your stop loss again? So you forget about this stock, forget about it and take it from your portfolio. You should, this stock, it means it's called ZYT, for example, and you see that it goes down and it's not good anymore, so you delete it from your portfolio and you leave only the others that can possible to make me money in the future. And how long you stay? You stay until the stock is giving no more money, until it stops. And this is shown in training level 7, how to follow the trend. So hope this is clear for Wiseman, as I explained. Now he said, do you then give up on that stock even if it goes up again 1 week later? Now it depends on you. If you are a stubborn person and you think that this company, maybe you have heard that it has good news, it is just not the right time to buy. Yes, for me, I have stocks that it is for the whole years, like Facebook, like Twitter, like Apple. This I follow for many years, and whenever there is a move, I move with them and I make money. And that's why I sometimes put when I make money, I put gap apps I put, when I sell some stocks, sometimes I put my trades online that the people will see, but I will not show how when I bought it, or how I stay with it, or exact price where I sell it. So I just give an example how I do to the stock. So it's a good idea. That's why I told you before. If you like a stock, you like the company, and you see you can make money from it in the future, or you think that this company will become a very big company, try to follow it. But stocks, you should follow them. I'm not saying follow them, it means you go in the morning and you begin looking at the price, what it does. No, not like this. At the end of the day, when it is, let's say 3:30, at the end of the day, you check your stock. Has it a good momentum to buy? Yes or no? So this is what I mean by you buy on time. For 1 week, it could be 1 week, it could be 2 weeks, 3 weeks, 3 weeks. It doesn't matter how many you could stay. But there are some stocks that it is just a small correction. It could be a few days and then it come back again. But if the stock stays long, most of the time it will not go up from that price. It means you are not going to buy it by a price. You can buy it with another price, yes, but it is not the old price. That it is maybe higher. Okay? Hello, Diron MC. You said you are a great teacher. Thank you very much. Please, Diron, ask questions. I am here for you guys to explain as much as I can. And training level 1 in my trainings is free. So you can go to the website. You can take this training level free just to understand how my strategies are. And it's a very good idea to know something. And then you can, for example, here is my my website and my email. Just click the website and check the training level 1. It's for free. You click on it and you just sign up and just to watch the 28 videos explaining in general what is my strategies. Trump said, which stocks do you think they have clean chart, for example? Now, what do you mean by clean charts? Clean charts, there are criteria that you have in training level 4. Okay? It's part of the training. So I will not show what is good or what is bad. So it's part of the training. Ismail, you say, what you think about stock digital realty trust? So you should always give me the name of the symbol of the stock better than the names. I don't see the names of stocks. Facebook, Twitter, Apple, they are known. Google. These stocks, they are so well known that when you say Facebook, it's FB, Twitter, TWTR, and Apple, AAPL, or Google, GOOGL. So they are known. But when you give me a name of a company, Digital Realty Trust, I have no idea what is it. So please, can you check what is the name, or I can check for you. I don't know. Let's say Digital I find a lot of digital realty trust. Oh, it's maybe this one. DLR. So this is I think what you are looking for. which is called Digital Realty Trust Inc. It's in real estate sector, in rate office industry. Okay, so it has been going down for a long time. Today we have a big candlestick. I have no idea. I have no idea because we have a very, very big short sellers and they are pushing down the stock. The stock was 127. Now it is 17. Okay? And if you are interested, Ismail, you can check either my golden subscription or check training level 13. You get that training, you study it. It means you want to buy from the support line from the bottom. Try to take this training and send me an email, and we can discuss this in private, because this is a part of training that I can't tell you to buy or yes or no, because you should learn this, you study this, and you do it by yourself. Now, Bin Nguyen said, options is better than stocks trading. How do you know? In options, you are risking all your money at once. Now, Bin Nguyen, I'm telling you, let's say you buy $100,000 as options. Okay? I'm not speaking about you buy $100 and you say, you think that $100 a small money, but when you become a big trader, you should put a lot of money in things in order to make money. What if this 100,000 you have a gap down, and in the morning you find your 100,000, you find it only 10,000 or 5,000? In that moment you understand what I'm speaking about, because you options, it means you risk all your money at once, because it is leveraged. Leveraged, it means with small money you are controlling big money. Since it is leveraged, whenever you are mistaken in the direction of the stock, you lose a lot of money. And this is why, yes, I see it, Ismail, I see it. It's called DLR. Yes, I just showed it to you. Okay, it was going down for long, and then we have a very big candlestick, which is green candlestick. So in order to know and to study how to buy from the support line from the bottom, you should take my training, which is training level 11, or you should go to golden subscription, and you should subscribe for 1 month or 2 or 3 until you study all the trainings. We have 13 trainings in there. You study and you know everything about up and down, and why you buy or why not you buy, and what is your risk. Because some people, they think that when they buy, they want a sure thing. It means you buy a stock and then it goes up. It means they don't think that the stock will go down and they lose money. So you should put always a risk, that whenever you buy something, there is a risk to lose money, and this is the trading. So it doesn't mean that when you buy a stock, you are always right. There are many times when you are not right. Okay? And who tells you that you are not right? Is the market. When you buy a stock and you lose money, this is the market telling you. But in the opposite side, if you buy a stock and after a few days or few weeks or few months you are making money, it means that you are right and you will be making money from this stock. So as I told you before, thank you guys for all these questions that you asked, and hope we get more questions. So we continue our subject, which is how to be a disciplined trader. And we say the first thing is to know what you are doing. To know what you are doing, it means you have a full strategy. It doesn't mean that you want only to know where to buy and that's it. You will be making money. It's not true. You will be making money in one day, but in the other days you will be losing money. Okay? So what you should do? So you should have a complete strategy. From how to manage your account, how to put positions, how to put stocks in your when to buy stocks, when not to buy stocks, how to search for stocks, what are the criteria of the good chart that you are buying. These are the most important thing. Where to put your stop loss, how to behave when the market is giving you money. It means that the stock is trending up, you are making money. What you should do. Okay? So all these things is called a strategy. It should be complete. If you are in a situation where you don't know what to do, it means that your strategy is not good. For example, when you are trading, you should always have a solution to any problem that comes to your trading. All the time. All the time, prepare yourself to take decisions. Now, some people who don't want to take decisions, what they do, they invest for the long run. It doesn't mean that time will give them money. No. It means they don't want to bother themselves each day or each week to check. They leave it for years and then they will see if they make money. So they are at big risk because sometimes the stocks go down and they will be losing a lot of money. But this is the risk in investing. It doesn't mean that when you buy a stock, a guarantee of time will make you money. Okay? And I have showed you many examples where all the stocks are going good, but there are some that they are not. So what you should do in this situation is your responsibility, and you should be okay with any risk that it is associated with this stock. For options, most of the time, why people go to options? It's just because they have no money. Okay? They have no money. If you have $1,000 or $2,000, people, they say, okay, I will pay $200 or $100 to buy one contract or two, and even when they get money, they get $50, $100 or $80. It's not big money. And whenever they get hit, all their money is wiped out. That's why most of the people who begin with options, they will be wiped out quicker than the guys who buy stocks. Okay? At least when you buy a stock, your risk, it is not 100%. Except when there is a bankruptcy. Okay? But in options, all your money that you put could be at risk. And if you put $100, $200, you think that it is just you gamble with it. But what if you put all your money, which is 5,000 or 10,000, and the next morning you will not find your money because your option doesn't exist anymore and it is wiped out? What did you do? Okay? So my opinion, always be careful of what you are doing. Okay? So always be careful and try always to do stocks better, because the risk in stocks are better than the risk in options. When you have reached advanced level in education in stocks and you are doing very well, you can go and do options or futures or forex, which are more leveraged trading. Leveraged, it means you put little money and you control a lot of money. But your money can be wiped out at any moment. So you should know what you are doing, and the risk is higher. That's why you can make more money with little money, especially like futures. Okay? So this is wise man said, options kind sounds like casino. Yes, because in options you bet on the direction with all your money. Okay, either green or red. There is no other thing. If it is green, you make little money, that percentage, whatever is the percentage. But if the market is against you, it will take a lot from your money. It's not like stocks. Stocks is good, because if the stock goes $1, you make $100 in 100 shares. If it goes down $1, you lose $100. This is fair. Okay, it is fair because it's the same. It goes up, it goes down. The amount that you see is what you lose. But in options, if the stock goes $1, you can get some cents, 10 cents or 20 cents or 80 cents, depending on your contract. But the problem is that if the stock goes down $1, you can lose 85% of your money or 90%. So it is not fair for the buyer of options. It is not fair. Okay? Because your money is at risk more. Ismail said, est-ce que vous paramédisez votre position acheteuse? So, it means, do you add to your positions? Now, I will not add to my position, Ismail. I will show you why in the explanation. Just I will explain the explanation, and you will be okay to understand what I mean. Now, what does Ismail said? He said, for example, there is a stock $20. Okay, this is where you bought it, the buy. Let's say after a few days it goes to $22. You begin making money here. So he is asking, can I add to my position? Let's say he buys 100 shares. 100 shares, it means 100 shares. Now here, at this price, he wants to buy again, another 100 shares. Okay? Now for me, this is buy number 1. This is buy number 2. If the stock is going up more and more, it means this position here, one position, this is the second position, you will be making more and more and more money, because your positions becomes bigger and bigger. Your position becomes bigger. Okay? Now, for me, here is the deal. In my account, okay, here is the deal. I have many positions. Many positions. Now, each position, it has a set amount of money. Set amount of money. So, if I do add, it means, let's say I have 10 stocks. Just an example, okay? If I have 10 stocks, and each stock, just an example, okay? let's say you put $5,000 in a stock, just an example, okay? It means here that you are making your positions less, and you make one, you make it big. The other one, the second stock, is a small, and this is not good into your account. Okay, it's not good because I follow rules. It means I want to give each stock an opportunity to make money. Even if the stock is going up, most of the time I don't buy. Okay, I don't buy stocks more and more because I will make a bigger position. If you make here a big position, let's say the stock is going down, gap down or something, or one day which is bad, I will be losing this, and I will be losing this, and I will be losing my profit. So it will be a lot of trouble. So if it comes bad and goes down, I will be losing this position, money, I will be losing profits, and I will be losing maybe the first position, some money of the, let's say we have a gap down or something. So that's why in general I don't add up. So I don't add up shares. I don't buy more shares. So hope this clarifies the idea for Ismail. Okay, Ismail, you should divide your account into positions. Let's say 5 stocks or 6 stocks, and each position you have a set of money. Okay, and only buy each money. Let's say $2,000, you buy only one stock, but you don't add more money from other money that you have, because it will make your account volatile. It can go up very good, but when it goes down, it goes so good also. So for me, I don't now how much percentage or how many positions, this depends on you. It has a guidelines. Now these guidelines, you will find them in training level 8, how to minimize risk and how to maximize profit. So it will give you these guidelines that you should divide your account into many positions and the percentage. Okay, it has a guidelines. It means you should follow certain variables. There are some steps that you should do, and then you decide yourself how many you should do. Okay, so no one will tell you what is the good thing for you. It's you who should do this according to your trading style, according to what you do in your, and how much money you have. If you have $1,000, it doesn't mean, it's not the same as someone who has 10,000 or 20,000, 100,000, 1 million. It's different. Each person will put certain amount of money in each stock. So if you want to understand very well, you can do, Ismail, you can do the golden subscription, and you have 13 training levels from 1, 2, 3, 4 until 13, and it will expose all the techniques, all the training levels, how to search for stocks, how to put stop loss, how to follow the stock. This is all the thing that you should learn. That's why you should learn the complete strategy. Okay, at least you will understand what you are doing, and you have a clear idea. If something goes wrong, you understand from where this thing wrong comes from. Thank you, Ismail and Wiseman, and Bin Nguyen, and all the others, and Trump, who have asked many questions today. Thank you very much for asking these questions. So the more you ask, the more you get. And so as I told you before, how to be a disciplined trader, I say the first thing you should have is a complete strategy. You understand everything you are doing. There is nothing that it is hidden from you, okay? And if you want to do changes into your broker, or you change a broker, or you change something, you should do that because it is your future. You are not going to trade for 1 day or 1 week or 1 month and then you stop. If you go to continue many years trading or investing or day trading, you should make a very clean, right strategy, and you follow it and you see what's going on. If you, after many years, you are making money, it means that your strategy is good and you can follow it, you can continue, and it's very good. Okay, thank you very much, Ismail. He said, I'm going to sleep. Good night. Thank you very much for coming. But Ismail, before you go, thank you very much, Ismail. See you next week if God wills. Try to check my website if you have it. I don't know if you have it or no. Just take a look at it. If you have some questions, send me emails. Here is my website and my email. I think you have them. And good night, man, if you are going to sleep. For all you guys who are still with me, so it's very good to hang out and to continue our discussion. Now, how to be disciplined trader is to have, second thing, to have rules. You should not break these rules whatever happens. Okay? You should not break your rules, because when you break your rules, you become what? You become weak. Especially the problem that the most people do is when you read the news. You read good things about the company and then you go directly and you buy it. Without looking at the price, without looking what this company is doing. And this is one of the most problems that most of the traders are facing. Okay? Because you get what we call temptation to trade without knowledge. Now, this temptation, it means you are as if pushed to trade. It's just because of the information that you get online. You go to a channel, to a TV channel like CNN or Bloomberg or whatever, or CNBC, and you find analysts speaking good about a company. Okay? Speaking so good about the company that you get tempted, and the next morning you just go and you see this company and you just buy without looking at where is the price, what is this company is doing, and you have no idea. It's just because you get a tip from TV or from website or from whatever, or from Facebook group or whatever. So this is very, very dangerous when you have no rules. It means you just buy whatever you buy, you sell whatever you sell, you follow this guy, then you follow the other guy. It will be always it is always a trouble. And wise man said, one bank teller at my bank says he won't buy stocks because he doesn't follow his own rules. Yes, this is what I am talking about. Maybe he knows that he is weak in taking decisions, and whatever he reads, he watches good news about the company, and they say the company last year it does so good, and then he is blindly going to this company by knowing the ticker, and he goes to his broker and he buys a lot of shares. And then after a few weeks or few months, he will see that he lost a lot of money because the stock is going down. Because what the company has made in real it doesn't mean that the stock is doing so good also. You find some very famous companies, but their stocks doesn't move that much. Okay? Because it is saturated. Saturated, it means no more people are like to buy it more. So it is saturated. The people who buy, they don't sell. There is no other buyers. There is no sellers. So the stock stays where it is for many months, for many years. Okay? Some companies, they stay 10 years, 15 years. The stock is the same. It's $50. It doesn't go that much. 50, 55, 60. Then it goes to 40. Then it goes to 50. All these years, it doesn't do nothing. So, as I told you, if someone has no rules and he knows that he will break the rules, so trading is not his. He can do, for example, investing. He tries to studies a lot for some companies. Or if this guy, for example, your teller, your bank teller, he knows about banks and who is the most influential bank in terms of big money, in terms of earnings, and he can just buy these companies and that's it. Because he knows something about the companies. And he invests for the long run. Okay? That's it. It means he doesn't bother himself to trade each day or each week. Now, another question from Juan de Casa. Is Friday good to buy stocks for swing trading? Now, Juan de Casa, why you choose Friday? It means what is the reason you say Friday? You don't say Monday or Tuesday, Wednesday. All the days are the same. All the days, whenever you search on Monday, Tuesday, Friday, whatever you search, whenever you find a good stock and you want to buy it, that's it. So for me, when I do the search for the week, it is just because the guys in the weekend, they can study it, they can see why this stock is good, why stock is bad, and I do this for practice. It's not that Friday is good, is better than Monday or the other days. All the days are good. Whenever you find a stock, you buy it. So Wendy Casa said, many stocks sold off on Fridays, but they go up on Tuesday and Wednesday, I think. So here you want to make rules for the market. So you right now you begin to make rules and you ask the market that you should go on Tuesday and Wednesday and you should go down on Friday. This is not true. If you take even if it is good for 1 week or 2 or 3 or 4, it doesn't mean that the market is doing what you asked to do. Okay, so forget about these days that the Friday goes down. It's not true. It's not true because some Fridays are better than the whole week. Sometimes Monday are better. Sometimes Tuesdays. So don't take it as, don't make rules to the market and try to see that the market will follow your thinking or your results or what you expect. Okay, so take it as general. All the days they can go up, they can go down, because it is the days, it is what the day traders are doing. The day traders, if they find that there is a big buyers, they just buy. And you see that this day, it could be Monday, Tuesday, or Wednesday, or Thursday, or Friday. If the day is bad and the people are selling, they short sell, and the day will be bad for investors. I mean, okay. So don't put rules. There is no rules like this, and expect always to trade whenever it is good for you. Diron MC said, is M, a good stock. M, I think it is Macy's, right? Let's see. M, what is it? Ah, yeah, it is Macy's. I know this stock. Macy's, it has trouble. You see here, the stock was, how much it was? It was 45, now it's 32. It looks like it's going up. And you see, it's in department stores, in retail. And you say, growth and dividend. Let's see how much dividend it gives. Macy's stock price. I didn't see. The dividend is 4.69. $4.69. Okay. So, Macy's was having trouble and it's going down, and then now it's going up. Now, if you want to invest, you should study more the financial statement of this company and compare it with other stocks. I will just show you this company compared to the other companies, what it looks like. Okay, so how you do that? This in terms of chart. I'm not speaking about the earnings and this. You should see it in their financial statement. But let's go to the chart and look. This is the chart. Now it is a retail in department stores. Let's go to this retail. This is the retail sector. Department stores here. Okay. Now look at the, we take this. Look at this chart and look at the index. Okay? Now what do you think about it? This is the index. It means the index, it means the whole companies that are in department stores industry. They do, I think they do the same as the market, as the Dow Jones or something like that. We try to see Walmart. Walmart is doing the same as Macy's because it was 109. Now it goes to 87. TJX companies that is doing better than Macy's because it's going up so good, better. Dillard's, I think it's doing the same as the market. Kohl's is doing the same as the market because here is in nearly the end of January, and it's like the market. It has been doing so good in the past. This is Macy's. Okay. This is Dillard's. Let's see Dillard's. $25. Sears is $3. Understand that Sears is one of the companies that do so bad, like Giuseppe also. It's $3.15. Now let's give you, and series hometown and outlets. Let's show you the yearly and what did happen. You see how bad it is. Giuseppe, you see where it is now. You see how good it was in the past. It was $87, $87.18, and now it is $3. So Giuseppe is known. I know it for a long time ago. Even Sears. You see Sears? It was $195 in 2007. Now it is $3. What do you think about this? These companies are going to be bankrupt. Now Dillard's, it's 25. It goes to $3.85, but the company comes back. Okay, this thing. Let's take this thing. You see, for example, Macy's is going up for many years, for 6 years. One bad year in 2015 goes down, then it goes up a little bit, down a little bit here. So we will never know. Kohl's, Dillard's, TJX. This company is doing so good in a lot of many years. This is so good. Walmart. And then the index. Okay. So let's go back. And for Macy's, you see the dividend is $4, 4.86, I think, per year. This is the yield. But understand, Diron, that the dividend is taken from the price of the company itself. It is not a paycheck that comes out of the pocket of the company. It comes from the stock itself. Although yes, it's good. You don't sell your shares. You get a check each 3 months, and you get some money. But understand that this check is taken from the stock itself. Okay, it's not from the money of the company itself. A lot of people, they don't understand this, but I try to make it easy for you guys to understand this. Now, so Darren, if you want to invest, you should study the companies. If you know, thank you, Darren. If you want to, for example, if you want to invest for the long run and you like the retail, you can just buy an ETF without buying a stock. You buy an ETF, it means you buy the industry itself and you leave it for 1 year, 10 years, 5 years. If the industry is doing good, you will be making a lot of money. If the whole industry is doing bad, you can lose some money. And this is part of the game. But when you pick stocks, you have more risk. Why? Either you can make a lot of money or you can lose a lot of money. The thing is, when you buy a stock, it's not a collection of stocks. It's only one stock. if the company is doing bad, as you have seen, like Sears, like Giuseppe, okay? Let's say they are doing bad. If you have bought them for many years, you will be bankrupt because you find the stock, it was $1.95, like Sears, and now it is $3. Man, you have lost all the money. But let's say you buy the industry, you will not lose that much because the stocks that are in the industry, if they let's say if they go bankrupt, they replace them with another stock. So always it's it means it's something in terms of risk. That's why some of the people who have a lot of money, in general they don't buy stocks. Either they buy ETFs, they buy mutual funds, because these mutual funds they change the stocks regularly. Each year they change them. So he doesn't care what happened in the market. If he is getting some nice percentage each year, he doesn't care that much. And he doesn't want to throw his money in one stock, and then if this stock is doing bad, he will be losing all his money. Because when you put when you buy an index or you buy a mutual fund, understand that you get the average of the market. You are not getting the best and you are not getting the worst, so you are getting the average. But when you buy a stock, it could be you are the best, it could be you are the average, it could be you are the worst. So you will never know until many years. Okay, so understand that. And this thing is about what we call dividend. Yes, before I forgot, Diren, before I forgot, try to go to my website and check training level 16. How to trade dividend stocks. It will give you a lot of information if you are here from USA about kind of stocks of dividends, about the rates. There are different kind of taxes. If you buy a stock, you may pay more tax than the other stocks paying dividend. So you should know which stock to buy. There are many ways to know, and my training doesn't show you how to search for stocks. No, it will just give you how these dividend stocks work, how much they give, what is the risk that you should know about them in many years. It's a very good training. If you are interested, please, Darren, check training level 16. Now, Trump said, what's the worst mistake that a trader could make? It means the mistakes. Now, the mistakes are a lot. Do you believe that I have made training level 17, how to fix your trading problems? Now, problems in trading are a lot. Now, each person is not like the other person. So when you find 2 losers or 3 losers, it doesn't mean that they do the same mistakes. But one of them is doing the mistake, another one is doing another mistake. So there are a lot of mistakes. If you know the mistakes, you can correct them. But the problem is that, let's say you don't know the mistake. How can you correct it? Now, if each year you lose money, now what does it mean? You are making the same mistakes. But you think you are doing the right thing. So if you don't just stop trading, take some training, see what is the mistakes and begin to correct them, and then begin to trade, things will be better for you. I believe that because this is what the right thing to do. But if you continue to do the same thing, mistakes, believe me, you will get the same results. Like when you say 1 + 1 = 2, so it is always the same. Is it now or 1,000 years ago or 1,000 in the future? 1 plus 1 equals 2. This is math. So this is what you do. You do mistakes, you have bad results. You correct the mistakes, you will have better results. As simple as that. Okay? Thank you, Darren. Thank you for your questions and for watching and for listening to me. Thank you very much. Rahmatullah Modi, thank you. How are you, man? It's 1 hour 35. You come late, but it's good. It's good that you come. Now, Darren said, how can I control my emotions during training? No. It's not during training. It's during trading. You control your emotions when you follow the rules and instructions. For example, I just give you an example. Let's say we buy the stocks at the end of the day. At 3 o'clock, you begin to search, you find stocks with our criteria, and then when it is at the end, you buy the stock and you put stop loss. This is the procedure how to search for stocks, select stocks. Now, let's say you change the rule. Okay? So let's give you an example. Okay? These are just rules. Now, for example, this is Friday. Just an example. It's 9:30 p.m. and this is 4 p.m. in the afternoon. 9:30 is the open. It means when the market, trading market opens, and this is when it closes. So let's say a stock, it was $20 in the morning at 9:30. Now after it's let's say 10:30, this stock is going good to $21 and the candlestick is green. You see candlestick that's green, it means the stock is going up. Okay? Now let's say you like this stock and you buy this stock in the morning at $21 in the morning. You are doing swing trading. It means you are buying this stock for many days or for many weeks. But the problem, at 3:30, before the close p.m., you find that the stock is 1950. It goes down. So you just buy in the morning and you are losing money. Now for us, we don't do that. We don't buy the stock in the morning. So my strategy is to buy at the end of the thing when here it is green. Because here $19.50, the candlestick is red. Because in the morning it was green, what's going up, but the price reverse stops going up and then it goes down. So for us, we buy here. If it is 950, the stock opens at 20, it goes to 1950. We don't buy this. We don't buy like this. For us, what we do is around 3 p.m. we do our search criteria. We find many stocks, we put them in the chart, and then we go one by one, these stocks one by one, until we find the one that it is good in the chart. This one, this one, this one, and this one. These are the stocks that are good, and the others, according to my criteria, they are bad. So we delete them. We delete those that are bad, and just we leave those that are good. So around 3:30 p.m. we buy this stock because we have the signal. It means the signal, it means the criteria where I bought my stocks. They are good. Now, when we buy a stock, which is a very good signal, and then we put a stop loss to protect our money, and then we close, 4 p.m. came, we close, and then we check it tomorrow at the end of the day. So this is my strategy. My strategy works like this, always at the end of the day, where I buy stocks at the end of the day, not in the morning. So if you follow my rule, this is the rule. Buy at the end of the day. This is the rule. You should not break the rule, because a lot of people, they buy in the morning thinking that the stock is good, but at the end of the day it's bad and they lose money even without beginning for the day. Just you begin with the day, you lost money. How come you stay many days and maybe you will be losing more and more and more? Okay, so this is one thing that I do always, and this is a rule. So in order to control your emotions, what you should do, you should apply the rules that I set in my training, in my strategies. There are a lot of rules. Okay, a lot of rules. There are rules of criteria. It means, how do you search? Now, when you find a list of stocks, what are these stocks that are good to buy? What are the charts of stocks that are bad not to buy? If you do the mistake and you buy a stock chart that it is not good and tomorrow is going down and you lose money, it is your fault, because we have chosen a stock that you should not choose. So our criteria eliminates the bad charts and leave only the good charts. And the charts, it is not patterns. Pattern, it means when you see a chart like this, you buy it. No. You should see charts that have a lot of criteria that are good criteria. And this is in training level 2, how to search for stocks using Stock Screener. Training level 3 and training level 4. All these gives you the best charts stocks to buy. And then another rule is to put stop loss. Now, why we put stop loss? It's just to protect you from the downside. If the stock is not the good one and tomorrow the stock is going so bad, you can exit with a small loss, because it's like an insurance to you. Why you pay, for example, why you pay insurance and you are in good health? Okay, you can just ask yourself why you are doing insurance. It's just because when you are sick, you can go to the doctor and have medicine with less money. Because if you don't have insurance and you go to the doctor, you will do a lot of stuff, consultation, and you do tests and the other stuff. It will cost maybe hundreds or thousands of dollars. So you see that? That is why we use stop loss. Stop loss, it's not, we put it because it's a decoration for the stock. No, it's something that gives us good thing. Because sometimes in bad days, if the stock is going so bad because of bad news or because of the market or because of the international news, if you don't use that, you will lose a lot of money. And the beginners, they lose a lot of money each trade. That's why they can't stay. Especially those who use, they use what you call a lot of ways that are not basics in trading, and this is a real problem. Thank you, Darren. He says great info. Thank you very much. Hey, Rahmatullah Modi, how are you? Darren say, how can I control my emotions? We have spoken about that. Chandra Sikar said, if stock splits, how to identify resistance line. I don't know what you mean by resistance line when you, what is this resistance line? Okay, I will show you an example. Maybe you can tell me if it is good or not. First, when we say split, it doesn't mean that you will make money because the stock splits. Stock splits, it is just if the stock, for example, it is $100, it splits to two. It means it means 2 shares for 1. It means today we have $100, the stock price, and you have 1 share. Tomorrow the stock will be $50 and you have 2 shares. That's it. It has nothing to do with resistance line or support line or what is this that you are talking about? I don't understand what you are saying. I will show you here with a chart. Okay, just a minute. I will show you. So give me just 1 minute. Okay, this is the chart. So let's yes, let's go to the explanation is better. So give me 1 minute just to explain this. So sorry. So now an example of this is a lot of people is always confused with split. They think if there is a split, it means the stock will make money. No, it doesn't mean that. Okay. Now here is an example of a split. Okay, I just make sure you understand. Let's say the stock is $100. It is 1 share. 1 share is $100. Just to explain this. Now, let's say this is today. Let's say today is Friday, for example. On Monday, let's say it's split. The stock price will be $50. But since it is here $100, you divide it by 2. So here you will have 2 shares. This is one kind of split. Let's say this on Monday. They split it into 2. Now the reason why a company will do that, it means sometimes the company thinks that $100 is too expensive, especially when the stock, let's say it stays in the same price. Let's say here $95 in 2017. Now in 2018 it is $100, so it doesn't move that fast. So the company says, for example, what if we divide $100 to $50? So it becomes here $50 today, on Monday. Now they think that maybe the stock will go up very, very quick to go to 60 or to 70. What does it mean for the company? It means the company will make more money, and the people who buy, they make more money. This what always is happening. It has happened. Do you remember? With I give you an example. I give you an example with Apple. For those who okay, I will give you an example with Apple. Now, Apple in the past, it was 750, around 750. Let's say it's 700. It is one share. So they divide it into 7, and they have on Monday, let's say it is 100. It means you will have 7 shares. Now from 100, the stocks go down to 85, I think, at that time. And it goes now, let's say, to 160. It means Apple when it goes down, when it splits from 700 to 100 right now, in the past, and now it is 160, just an example, 160, it means they have made money. They have more shares and they have made money. Now let's say you have some shares of Apple. At that time it was $700. Then they divide it by 7, it will be 100. Now it means from 100 it goes down, then it goes up to 160. What does it mean? Let's say it is 150 in order to have the good thing. It means from 100 to 150, you have 50% of your money. What does it mean? It means if you have $700 as one share, this $700, you add 50%, it will be $350 as profits. So you are making money. But when there is a split, it doesn't mean that the stock will go up. That's why when you are searching for a resistance line, support line, I don't know what you are, where is this support line or resistance line, or there is no, because the price has changed from $700 to $100. So there is a change, a big change. So there is another chart, it's different. So you should find the resistance line, support line, or whatever you want to search from this new price that it is now, not the old, because the old doesn't exist. This is what we call a split. And sometimes there is a reverse split. Now a reverse split is the opposite. Okay? Reverse split, I just took this. It means when the stock is small, let's say the stock is $1 and it is one share. Now what they do is they take 10 shares of this $1 share. They take 10 shares and they make them one share, and this new share is $10. Now when you do the split, your money is the same, but the shares have changed. Let's say you have 100 shares at $1, and they make it one, from each 10 is one share. It means you will see in the morning that you have only 10 shares of this stock, 10 shares, and each share is $10. Okay? It is the same money that you have. It means 100 here, $100 here. There is no change in the money that you have. It doesn't change. What it changes is the price and the share itself. Hope it is it is understood. This Chandra Sekhar R. Hope it is explained. If you have more question, Chandra Sekhar, you can ask if you mean something else, okay? Because when you say identify resistance line, or it's ambiguous for me. I don't know what you are looking for. Thanks Chandra Sekhar. If you have a look at what I have explained. If you have something that you don't understand or you want more to understand, just ask me, since we are staying more. Okay, Wiseman said, Karim, do you ever have two positions in the same sector or just only one? Yes. Sometimes I like when there is a big move in the sector. One time, each year is different. Understand that last year, in the beginning of the year, 6 months, we have the utilities sector. I always show some stocks and they traded a lot utility sector. Because whenever I search, I find a lot of good stocks in utility sector. Then we have electronics. Okay? And we have other kind, like internet stocks. It means there are a lot of sectors that they move, but other sectors go down. So it is better to know where are these sectors that are moving. Okay? And in this week, I will make videos in my subscription, golden subscription. I will make videos on how to discover these industries and how to search in them each time. You can do it by my search, you can find them, but in order to see the whole industry and to go after it each day, just to look what's going on. But understand that things move, okay? Some industries, they continue 1 month, 2 months, 6 months, 1 year, 2 years, and they are going up, they never go down. And this is where you find opportunities. Sometimes, yes, I buy one stock or 2 or 3 in the same industry, but I don't buy all my account with the same industry. I always find bargains in every industry, because if one industry go bad or it has a problem, I will not exit all my stocks. Okay, so I can exit 1 or 2 or 3, but not all. So this is the good thing I do always, is to always search. We go to a question from Trump. Why opening price is so important? Yes, opening price in day trading is so important, always. Okay, so I think the open gives you an idea, a general idea of what the stock will be, but it's not a confirmation. Okay, it's not a confirmation. But in general, let's say I give you this as an example. Okay, let's say it is 9:30 today. This is today, and this is yesterday. Now, yesterday close. Let's say the stock is $20.00. This is the close of yesterday. Now, today at the open, the stock might open at $20, the same. It's rare to be the same. Sometimes it's $20, let's say 20 cents. This is the open. Sometimes it's 20. Sometimes it's 19, let's say 1985. So we have 3 different opens. This most of the time is positive. Okay? Positive, it means that that this stock might go up in the morning, might continue to go up because there is some price going up. This, it can go up or down, you will see it. And this, it means it has gone down from yesterday, because yesterday is a very good indication on the close on today. Now, things can change at any time. This is the problem in day trading. It opens good, it can go up, and it can go down after a few minutes. This, it can go up, it can go down, whatever. And this, if it go down, it means it opens down. It can go up for minutes and then it can go down. Just according to what you see. So these are some techniques that I show. These are techniques I show in training level 12. How to day trade using charts and candlesticks. I give techniques how to find the direction of the day. If you are going to be a day trader, you should use this training level 12. It means how to day trade using the chart and candlestick. Okay, I'm sorry. I was explaining the whole thing without without having to show you the thing. So what did he say? I say, let's say yesterday the close is $20. Today is the open, which is Monday. Let's say it is Monday. The stock can begin above yesterday close, $20.20, or it can be the same, or it can be lower. Most of the time, if it goes above, it means it is positive. So in general, what will happen is that if it is positive, it means from yesterday, what will happen? Most of the time, the stock goes down a little bit and then goes up. So the candlestick, you see it like this. Here is the open. It goes down and then it continues to go up, and then it goes at the end of the day, and then it goes up. This is the candlestick that you can see. Okay? Now, if it is this one, it should be the same as this one. It is red. This is the open. It opens red. It goes up a little bit, and then it goes down, and then at the end, it goes up again. So, but it is red, and this is a green. So this is one positive, and this is negative opening. This is just some information I give you guys. But if you are interested to get all the details, try to check training level 12, how to day trade using chart and candlestick. It's training level 12. Sorry guys for not showing everything. So I hope Trump, you have an idea about openings and why it is so important. Okay. Now, Kamal Ahmed, how are you? And he said fear of missing out is the reason maybe for buying in early hours. It is not really the fear of missing out. The people, they don't know what they are doing. Are you doing day trading? Yes or no? If you are doing day trading, yes, you should buy in the morning because everything is in the morning. The good stuff, the good volatility almost happen in the morning. But if you are a swing trader like me, like other guys, so we always buy at the end of the day in order to have the signal. So this is the problem, okay? Thank you, Chandra Sekhar. Thank you very much. And thank you very much. For me, I'm trying always to explain, because some people they focus on something and they think that it can give them money because they know one thing. In order to make the money, you should know a lot of basics in trading. It's not only one thing that you can succeed, okay? But as you understand that the market is always moving depending on the players in the market at that day. And day traders, they don't care where the stock will be. They don't care. They can go long, they can go down, and they make their money with selling short. But for the people who are going always long, if the market doesn't go long, they will have losses. Okay? And another question from Chandra Sekhar. Can you please refer best stocks to read in swing trading? Okay, Chandra, understand that we are using stock screener. We are using criteria to find these stocks. So it is not a matter of what we call stock picks. Someone gives you the stocks and they are good to go. No one knows if these stocks are good or bad. But we use signals to find these kind of stocks. So in order to know, you can do either the golden subscription, or you can do the silver subscription to find this kind of stocks. Or you just go and order training level 2 or 3 or 4, and you can know how to find this kind of stocks in your market. Either you are working in India market or any other market, you should know this kind of criteria. So I'm not going to give you stocks, symbols to buy. No, this is stock picks. This doesn't show you nothing. Okay? So Rahmatullah Modi said, when stock is trending, why we have some time red candlestick? Oh, okay. I will just explain this, which is very good question. Okay, so let's answer Rahmatullah Modi why we seek red candlesticks in a trend. Okay, so let's go to the explanation. Okay, here is an example. You buy stock at $20 and the stock is trending, trending, and trending. Okay, so let's show you. This is a kind of trend that we are following. Just an example. Okay, why we see in a trend, this is a trend going up. Okay, why we see that the stock is going into mini green candlestick and then we have red candlestick. Okay, let's say I give you an example here at the end, just an example to show you. Okay, so let's say a green candlestick here, a green candlestick here, a green candlestick here, and then we have a red candlestick here, a red candlestick here, red candlestick here, and then you see a green candlestick here. So in your opinion, you say, why do we have green and red, sometimes red, and then we see green? Why is that? This is because when we have red candlestick, what does it mean? It means there are two actions you should understand. Some people are selling shares to have profits, selling shares. Now, why they sell shares? To get profits. They don't want to stay more. So one action here is people are selling shares to get profits. Let's say someone is buying at 20. The stock is going at 30 here. Now in the morning here, he say, okay, I have bought 100 shares. I make $1,000 right now. I don't want to leave this 1,000 here. So I want to take this 1,000 and sell my shares. So you see the idea? It's just traders, they sell. Because whatever the reason, we are not questioning the people why they sell. But let's say these people are selling to get profits. Now when they begin to sell their shares to get profits, the stock will be going down. Now what is the second action that happened? The second action is short sellers. Who are day traders? Day traders, it means these guys, they didn't buy here or here or there. They didn't buy at all. But they just sell short some stock, some shares for those people who still own. Because when you do short selling, what does it mean? It means you borrow shares and you sell them. You borrow shares. Now, from where do you borrow shares? The broker will take shares of those people who don't sell. Who don't sell at all. Don't sell for many months, for example. He gives them the shares to short sellers. They short sell. If the stock is going down, these short sellers, they make money. Now, how do they make money? They buy them at the end of the day back and they give them to the investors. It means to the broker, and broker to give to investors. But the investors, the people who don't sell, it means who are the investors, they don't know that their shares are sold. Because the broker doesn't care. He just sells, but he knows that these guys will buy back the shares. Okay? So it is on behalf of the broker. So that's why you see this red candlestick. It could be 1 day, it could be 2, it could be 3, it could be 5, it could be whatever. And this, I say to you, it is two actions. Selling shares to get profits for those who have been long, and day traders, short sellers, who want just to make a profit in that day. They can make profit or no, depending on if the stock goes down too much. Okay? So this is the explanation. Hope it is a good explanation, rahmatullah, for you. Shakra Sikar, can you please refer best books, not stocks, to read in swing trading? No. See, most of the books that you will read, they have indicators, and it is so complicated books. My training is easier. If you, for example, if you don't want to buy videos, you can buy ebooks, and you can just send me an email. I have a discount. I can make you a discount. Just to choose whatever training you want, and I will make you a discount. Okay? So, but books, you can read whatever you want, books, but I don't suggest books. Here is my email, what you call my website and my email. Send me an email and I can help you with that. Okay? But if you want to read books, just go to Amazon, put swing trading, and you will have thousands of books, and you buy whatever you want. Or you can go to the library. If you are in the United States of America, you can go to the library and you read books for free without buying them. It means if you want to. But understand, these books will show you that they use indicators, and I don't use indicators. My strategies are simpler and easier for everybody. Okay, so you don't need to understand more, because indicators they use are more strategies. It means in one strategy you will be using a lot of strategies, and you find these guys online. When they speak about swing trading, they begin to show you indicators, and you will never understand anything from what they say, because it is so complicated. Because each indicator is a strategy by itself. So you will make you more problems than you solve your own problems. Okay? So Chandra, you can send me an email. You can go to my website, check the prices, click on the thing. I give some discount. If it's not good for you, send me an email. I will help you to search for this kind of training. If you want books, just go to Amazon or to Google, and you find the swing trading books, and you buy whatever books. But understand that you will not get that much, because they are not strategies. They are just general ideas. They don't show you exactly what you do. And even if they show you exactly what you do, most of the time it is indicators. And indicators, you should study these indicators in order to understand what they say, and it will be a lot of trouble for you. For me, there is no indicator at all. When you use my training, there is nothing. Oh, okay. See, if you are my student and you took all the training, so send me an email, show me some of your trades, and I will show you what you do. Okay? Because if you are going to study other books, you will have more indicators. You will have trouble with that. Okay? So Chandra Sikhar, if you say you are my student, why you are asking about the books? You are asking about something. Okay. So Rahmatullah Modi say, Kareem, sir, where is your coffee? Here, I'm still drinking. It's like 2 hours 17 minutes I'm drinking, but as you know, I drink little by little, and I know it is cold, but it's okay. I am used to that. You forget the coffee. So Chandra, please send me an email, and I will help you study your trades and see what is wrong. If you are not making money, sir, can you make a long video, might be next week, general about fear, greed, controlling emotions of traders? Yes, thank you very much. I will think about the video you are asking. So see, there is something wrong. If you buy something and you don't sleep at night, it means you have gone to a big risk. The risk you know, but you did and you buy it. So the best thing to take this fear and this greed and this thing is to follow the instructions that I am giving to you. Okay? To follow the instructions. It means if I tell you you should divide your account into many positions, you should do that. You shouldn't put all your money into one stock and then you have a gap down and then you begin crying and you say how my greed and my emotions, because you don't follow the instructions. If you don't know the instructions, send me an email and I will give you a list what you should do always when you buy a stock, when you want to control your risk in the management. I always, and if you have my subscription, you will study all the training that I have in 13 training levels. All the information I'm saying is into details there. If you don't understand something, send me an email directly and I will answer you. Okay? Because you control your emotions when you make things right. Following instructions. You don't go, for example, and you buy options without knowing the risk. You just buy and then you get hit. When you buy a stock, you should put stop loss. Okay? There are a lot of things that you should do that it is that you should do in order to control your fear. The control of your fear, it's not just by speaking. It should be done into your account. Okay? And don't get tempted to change your rules. Okay? So, or someone tells you, oh, if you buy this stock, it is a sure trade and you can make thousands of dollars if you buy now because there is some news coming or there is some good news, or this, you are gambling. Because no one knows what will happen in the future. No one will tell you that this stock will be going good. That's why we use probabilities. If you go to check, for example, training level 5, how to make money from stocks, you will find the probabilities I'm speaking about. You should study all the training one by one. If you find any, if you have any questions, you should contact me and send me an email and I will explain more and more. Okay? So Trump said, a mystery group of wealthy donors and Soros spends 50 million for private Trump Russia investigation. So what's this do with our training and swing trading? They give money to whatever they like. We don't care about these people, so there is no problem with that. Trump, you are taking us outside the trading. And what's this Trump Russia investigation? We are not doing politics here. Okay? So Trump, I don't know what is the relation with what we say and private Trump Russia investigation. It's another subject. I don't know. Now, Chandra Sikhar said, we can keep for generation that long video. You are the best teacher I ever find. Thank you very much, Chandra. This is a good testimonial. Thank you very much. I'm trying to help as much as I can and try to answer every question. And that's why I make rules in the training. That you should follow the rules. If you find a rule that it is not good, you should send me an email. You say, okay, Karim, this rule is not good because I do that. I will have this, and we can have a discussion, and we will get results from that. Because the market is always the same. Always the same. There are short sellers always. There are some that they buy too much the same. There is gap downs always. There is gap ups always. Always it's the same thing. So the basics of trading doesn't change. Okay? Whatever you use, the basics are the same. And Trump said, Karim, do only day trade Tesla and Nvidia and Netflix. Why should I do day trading with those? I don't have time to spend watching the whole day for a stock. I have done this before and I will not do in the future. Sometimes I like to do a day trading when it is an IPO, the first day of an IPO. Sometimes I find some famous stock and I do a trade, but that's it. Okay, I don't do day trading and stay the whole day following a stock. I don't do that. Okay, for me, I prefer swing trading, to buy stocks at the end of the day. Following days, I check 5 minutes each day, or 1 minute or two, just to see where are my stocks. Are they going up or going down? That's what I do, and it gives me free time, and this is what I like. So you want to give me too much job and watching those stocks and staying the whole day with them? No, I'm not doing that. I am too lazy to do that. I have been doing this in my early years, but I would not do that. What I do is better in everything. So as I told you, as he say, thank you very much, Trump, or because your name is Trump, you want to include your name, Trump. Russia investigation. Are you the Trump that you are speaking about, or our President Trump? So as I told you, day trading is for those who like to take actions, who likes to stay in the morning following stocks, following news, following what's going in the market. It's daily. Okay, some even they go to forex and they go to futures because they like the whole day trading. They like to trade at any time. Like when you go to forex or you go to futures, you can trade at night, you can trade in the evening, in the morning, whatever you want to trade. You find the market near you, you just see an opportunity, you buy few hours or 1 hour or two or whatever, you sell, either you make profit or make a loss. That's it. But for me, it will be like too bad to continue doing day trading. That's why swing trading for me is a good stuff. So as I told you, to be disciplined, it means you follow the rules, don't do stupid trades. Okay, you get influenced by watching CNBC or CNN or Bloomberg or any website. You get influenced because the people, they talk, analysts for example, they talk about company that it is so good. They make it as it is the best company in the world. And they begin to say how much they make last year. And they will show you the chart that last year it was the best year in the company, and it will continue like that. So they ask you to buy. This is their objective, is to ask you to buy and to influence you. That's why we have TV. Okay, why we watch TV? We think that it is an entertainment. It's not for business. If you are watching this kind of news, you are going to entertain yourself. Okay? And this thing most of the time I don't do. I see that hope the sound is very good, because I see that the picture is not doing so good. So as I told you, for many things, when you get tempted by TV, what you will do? You do in general stupid trades. For me, sometimes when I don't watch TV at all for this news or CNBC, or I am out of all the influence of any kind. Okay? And then sometimes when I go online just to check something and I find an analyst speaking good about a mutual fund or a company or whatever, or it is this the stocks that he picks and it is the good companies for this year. An example. Now, this guy has no risk because he is paid to give such information. He is paid. He has no what we call risk because he didn't buy stocks or this kind of stocks. Okay, and then when I go to the chart, I find it's the worst chart ever. The stock is going down for 10 months or 2 months or 6 months, and the company asks this guy to say good things about the company in order to make the price go up because the people will buy. This is what happened in the market. Okay? Let's say, for example, we take an influential person, like for example Warren Buffett or Kramer, or anyone who is in TV, always the people see it, so he can influence people. If he say, for example, that he bought Bank of America, all the people will come and buy it. It's not because Bank of America is good, no, it's just because they get influenced of that guy and they follow and they buy, so Bank of America will have money. Warren Buffett, because he bought before with cheaper price, now he is will be selling in the future with a bigger price, and he gets interest rate and he gets dividend. You know, it's a lot of things like this. Now Chandra Sikar said, why can't you conduct training in India, seminars, workshops supporting millions of traders? Now, see, Chandra, I'm trying with my YouTube channel or with my website. A lot of the Indians, they come and they get the training and they follow me without going to them there and doing some stuff. I haven't done such thing as seminars or workshops ever. Even here in the United States, I haven't done this. Okay, so maybe it's in the future, which will be a very good thing. Thank you very much for your suggestion, which is a very good suggestion. But there are some, for example, some Facebook groups or Twitter groups, or which is Chandra. If you can, for example, help, or you can have what we call affiliate program, and you think that you can help and sell training or something, just send me an email and we try to see that. So as I told you, here is the problem, Chandra. There are a lot of people, they don't want to learn. Okay, what they want to do is they want stocks that go up, as if someone is knowing the future. I have before one Indian guy, he gave me a name of someone who is in India, and he predicts stocks, and they are 100% sure. I say this is not a good way to get training. Okay, if someone predicts, prediction is not what we are doing here. We are doing here training with probabilities, not stocks. All the stocks will go up, not all the stocks will go down. So there is always probabilities, but it is a good way. It is a good way to do business. Thank you very much, Chandra Sikhar. And I know that there are a lot of people on Facebook, and there are groups. I know about that. And hope in the future I can make a group like this, but in the future, if God wills, it could help a lot of people. But a lot of people, they want a direct thing. They want like in the Facebook groups or chat room or whatever. They want just to see a stock just to show you a stock to buy, and then they can make money. It means they don't want even to think about it. It's automatic thing. Okay, and this is not a good thing in training. In training, you should know, you understand why you buy, you understand how to follow the stock, where is your stop loss. It means you should understand a lot of things, and this is what I do. It means I want to have independent traders who trade in the future, and that's it. Okay, so we are in 2 hours 35 minutes, so I will continue to have more explanation. So please, if you have more questions, just ask questions while we are in this session still. So discipline, it's a lot of things. It's not only one thing. There is a discipline in the trade that you do. There is a discipline that you should do in your account. It means you divide your account into many positions. You see what is good position for you, because there are guidelines you can check in my training, level 8, how to minimize risk and how to maximize profits. Okay, you should control your commissions. You should control your fees. It means control everything. It means all this is called expenses. When you trade in your account, you should know how much the broker is taking from your account each month. Not to trade from day one, from January to December, you don't see anything, and then at the end of the year, you will see that your account dropped and you are losing money, but you don't understand why you are losing money. Is it because the strategy that you are following? Is it because of the excess of expenses? It's like a normal life. It's a business. A business is like a normal life. It means when you have your paycheck, you are getting $2,000 or $5,000 or whatever thousands of dollars. You should not exceed, the expenses should not exceed what you earn. Because if you are using credit card and you just swipe, at the end of the month, you are over and you are in debt. This is what happened always with what we call with traders. It means at the end of the year, you will see the results. The results is what you did the whole year. If you control things, it will be very easy to understand what is the problem. If you don't make money, you will see that very easily. But if everything is a mixture, you understand that you have a real problem, because you will never know what is taking your money. Is it the trades? Is it the account? Is it commissions? Is it fees? Is it stupid trading that trades that you have done? Or what we call kamikaze trading? It means you just throw your money into options, do here, buy here. Sometimes you buy big, sometimes you buy small, sometimes you go to penny stocks, sometimes you go to big stocks. It means a lot of trouble that at the end of the year you will never know what is wrong in your trading. And my job is to make it easy for you guys to follow step-by-step guide, and at the end of the year you will see what's the problem. Okay, so if your account is very small, you should try to save more money to make it bigger, because sometimes smaller accounts have real problems. Okay, because of commission, fees, a lot of stuff, and penny stocks which are very volatile. Your account is not good with that kind of trading. So if you follow the instructions, follow the rules, and I know when you break the rule, you will find it. Okay? I see someone, he just contacted me just a few days ago. He has $145,000. which is a good account. 145, it's a good account. And he blew out this account in penny stocks. Okay? And he goes to even a stock that the company has problems. And he jump in this kind of stocks and they are going so bad. Okay? And when I try to discuss with him, he still have the same ideas. It is a destructive ideas that I lost a lot of money, but I stay in the stock. Okay. What if you stay, you lose more and more and more? As if he knows something good will happen. But he doesn't understand that the whole stock was collapsed. Okay? And he will maybe $145,000. He will lose it all by the end of the year, or of the month, or 2 months, or 6 months, because he do crazy trading. This is when someone like Chandra speaking about greed. This is greed. It means you want to make money, and you want to make money, but you don't know how. So you go to a risky trades and you push yourself to companies that have problems. Because when I see this problem, he told me that this company has problems, and so I say, why you are going to this kind of problems? It means the company has a problem. Why you buy its stock? It can go bankrupt, or it can stop working, or it can have no money at all because the stock price is going down. So try to avoid this kind of stocks that have problems. It means companies, they have problems. You see a stock, I have one guy, a stock, it was $98, 98, and now it is $2. And he asked me, what do you think? I say, I don't think about this kind of stocks. I don't choose losers from the beginning. If you say a stock was $10 and now it is $100, yes, I will think about it, because the stock is going good and it might continue going good. But when the stock is going down because the company doesn't do good, what do you expect from this company? It means you see company losing money and you want to be partner with this company. Who? This is all illogical. So some people, they don't understand the basics of business. Now for me or you, if you are going to do business, you find someone who is successful and you do business with him. But if you find a loser and he has never made money, let's say he has a company, or he has a stores, or he has a restaurant, or he's a car dealer, but he is a loser. And he will tell you, oh, can you help me? Give me $100,000, $200,000. I will make a business with you. I know how to sell cars, and I have a car dealership. Now, the first thing you ask is, he should give you proof that the business is making money. How can you throw your money into a business that it is a loser? This is what happened in stocks. In stocks, if you don't see a good thing about the company, especially about the price, I am not buying. I am buying more on the upside, better than the downside. Okay? It's very risky. Trump said the correction is over. Now the market will go good. Warren Buffett said that Dow will reach 1 million points. Say, Trump, see here. The correction is over. It is not over. The proof of that is the chart. Okay, you don't understand? I have explained this many times, like 1 month or 2 months ago, when I show you the Dow Jones. I will explain it to the second or to the third or the fifth time. Okay, I will just show you when the correction is over. Okay, so let's go to the chart. So Dow Jones, now this is the yearly, so don't think about that. Now let's go to the daily. Look here. I have explained many times, when you see the chart, okay? When you see the chart, understand what I am saying. This is between this and this. This here is this rectangular that you see here is February. This is March. This is April. Now, what do you see here? You see that the Dow Jones is trending into a range. This is the resistance line, this is the support line. Now what is happening is that the market is trending up and down trending into a range. What does it mean? It means this correction is not over. It is over when it crosses the resistance line, it goes up. When it goes here, from 24, it goes to 26 or 27, it goes above the resistance line. The trend will continue. This trend that you see for a long time, if it goes here, it will continue like this. If it continues, we will have another trend, if God wills, the same as this, in, let's say, 1 year or 6 months or 2 years. We don't know. Do you understand that? And you tell me that the correction is over. It is not over until we see a proof. Now, what I see in the market is that there are some industries that are doing good, some they are bad. Because now the industries are filtered. It means the mutual funds right now are choosing other industries. Okay, so in order to explain this, I have explained before, but Trump, you said Dow Jones is 30 stocks. Now why? Yes, he is giving his opinion, but I will show you why. Okay. Dow Jones is 30 stocks, but these stocks are the biggest stocks in America, and this is the index the most watched in USA, like S&P 500. It's the same, and they are mostly doing the same. Okay, so it is not that it is just 30 stocks. These 30 stocks are the biggest in many sectors. Okay, in many sectors. For example, you find banks, you find the computer, you find a lot of stuff. So it gives you a general idea, and they are always the same. They don't go differently. So when you check, for example, let's go to the chart and see if we find let's say this is the Dow Jones, like ETF. It's called DIA. It's $242. Let's see the SPY, which is now a Trump. Please look at this. Look at these two charts. Okay, this is the S&P 500. Okay, see the SPY. S&P 500. This is the ETF. And see the Dow Jones. Okay? Aren't they the same? Yes, they are the same. Because the players are the same. And this is, you should understand very well in order to understand the market. So, maybe you have an idea right now. You said it doesn't have to cross the resistance line. The trend can begin from there. Yes, it can begin. But in order to say that the correction is over, you should see the chart. Okay? As we have seen before, I will show you again, but please try to focus on what I say in order to understand, because you are not focusing on what I say. Now, let's say here, I will give you the chart again, and you are telling me first, you are telling me it is not the Dow Jones, it is the S&P 500. It's not the same. I showed you the SPY. And I told you that they are the same. See here? It's the same chart. Now you tell me, for example, like Dow Jones, they can start with you start from here, from 24, like here. Yes, but it has done many times. Here you see, and then you see here, and then you see here. So no one knows, it's not yet. It doesn't mean that this will be the right one, because we will never know until it goes up, it goes up. But here, I'm talking about what we call the correction. The correction goes down to this. Check here. It is 23,360, 29 cents. This is the low of the correction. Now, it is just here. It's just near the low. When it crosses, I don't care about the trend, because the trend, yes, it can begin from here, but it didn't succeed here. It didn't succeed here. It didn't succeed here. We don't know that if it succeeded here. So why you are optimistic that it will succeed here? No one knows. Okay? So for me to say that we are over, the correction is over, is that when it crosses the resistance line, it goes above. This, it means that all the stocks, most of the sectors will be going so good, and the stocks will be doing so good. Okay? Let's see here Apple, which was doing so bad. Okay, see Apple, which is the biggest stock in one of the biggest stocks in the Dow Jones. It was doing so good, but it collapsed. It collapsed again. Then there is another attempt. It's going so good, and then it collapsed. It means that it is not yet the time to say the correction is over. For me, I am not speaking about what the people say. Warren Buffett or any... Now, Warren Buffett, he wants to give hope because he has his own stocks. Okay? So, do you like that I showed you? Okay? That I showed you his stocks that he owns right now, which is, I think, 49 stocks. Okay? He wants, when he say the market will be over, it's just a positive opinion, because the people will begin to buy and his stocks will be going up. This is just an advertisement for whatever. He will do good for all America, because the people, they follow him. That's the deal. It's psychological. Okay? He said, Trump said, but you have to consider some information from the Fed, because the Fed is a big player in terms of printing money. Other, he can't raise rates, otherwise will cause the crash. Okay. Apple is trading into a range. It has earning next week. Okay. All big tech beats earning, including Amazon. Okay. So, see. Beating the... when we say beating the earnings, it doesn't mean that the market will, the whole market is going because the tech stocks will be going up. So my point is, what I am saying to you, you say, Karim, you have to be very positive. No, I am positive. I'm telling you that this week I will be making videos to my subscribers, golden subscribers, showing them what are the industries that are doing good and they are going so good, and what are the industries that are doing so bad and they are going down. This, you should work on them and you should go and search. I am always positive. Okay? Yes, short sellers are day traders. It means each day is something. But understand that short sellers, those who do long term, like hedge funds, like banks, like big traders, they do a big bet that the market will collapse and they short stocks. Yes, if the market crosses the resistance line, all these guys will be crushed. But not now, because I see other industries are going crushed. Yes, I see them. Now you don't see them because you don't search and you don't know how to search for this. For me, I search. They are going so bad down. It's not like the Dow Jones or the S&P 500, as you can see. No, they are doing worse. They are going so bad down because mutual funds are filtering the market right now. They are selling a lot of industries stocks and they are buying others. Okay, you will see this in a few weeks. And if the market is going so good, it means they have already changed their positions. This will take time. It's not easy. It's not just in one day or two. They buy everything and they sell everything. It takes time. Okay? So Wiseman said, what Buffett said has nothing to do with swing trading. We can't be disciplined if we buy based on what someone says. Now, understand that Warren Buffett, he owns the stocks and they are going down in this correction. He loses money. Now, when he is positive, he wants to try to influence people to be positive and to buy more. Okay? Now, where everybody is buying more, the market will be going good in the future. It's psychological. Because if a lot of people sell, the market will be collapsing. Okay? But if a lot of people buy, this is just psychological. See. Trump. You say, Karim, even if the market crashed, Warren Buffett will be making a lot of money. Yes, because he has a lot of money. He can have dividend. He can have interest rates from the banks. And he doesn't care that much. Because he has 50 billion. Do you know that in 2008, he lost most of 50% of his money, he lost it. But he gained it back because the market has been going up. So for him, it doesn't matter. because for him, he gets his money from dividend and from interest rate, not from the stocks themselves. So let me now, Trump, show you when the big correction happens, what happened to the stocks of Warren Buffett. I will show you right now. Please just concentrate. I will show you his portfolio because I put it in one of the thing. Let's go there. If I find his portfolio, yes, look at this here. All these stocks that you see in red, all this is his portfolio. Some of his stocks, he lost a lot. Some he make a lot of good money. Okay, let's see. So, for example, Bank of America, he lost 6%. This OFC, Coca-Cola, not much. This he lost. See, for example, let's go one by one, and I will give you everything. Now, Bank of America, it's the same as the market, as the Dow Jones. Wells Fargo and Company, you see it's going down. He lost some money. Coca-Cola is the same. Now, the Kraft Heinz Company. So you see here the stock was 82, now it's 57. You see that he is losing a lot of money from this stock, but he will not sell because it's not the way he does. Okay, he makes money from dividend. He doesn't care where the stock will be going. Apple, he lost some money. American Express, he has a gap up. That's good. This stock, Sirius, it looks better. Bad. Like the market. This it seems bad because the stock was 46, now it is 37. Okay. Southwest Airlines going bad. This airline bad. Like the market. Now this stock, Philips 66 is doing good, but I think this stock, it is not in his portfolio anymore. I think the company gets back his stock, his shares. I don't know what's the problem. I think they get their shares. This is better. It's going down, but it's not that bad. Okay, check all his stocks. Almost his stocks are doing like the market, like the Dow Jones. Not a big deal. This chemicals is very good. From 118 it goes to 125. It's very good. Okay, check this. The Visa company is very good. Bad. You see here the Charter Communications. It has a gap down, and he is losing more money from this company. It's going down for this restaurant. Oh, let's see here. It's going down. The stock was 68, now it's 54. All this is because of the MasterCard. It doesn't do. See MasterCard, how good it is. This credit card, it's doing so good, but it does like the market. Costco is doing so good. By the way, if you don't know, Costco is one of the best retail companies in America, and I think they do a mistake putting discount variety stores. It is not a discount. It's I think it is like not like Walmart, because Walmart is a variety stores and it is discount. This is selling by pack. I have an investment before, and I bought it. I bought this Costco in the past for some of my family when it was 85. It's going down, as you can see, going down. IBM. It was 181, now it's 146. So as you can see, now the risk analytics, this is good because this is one of the good stocks that doesn't go down. Walmart's going down. So all this is his G&G is going down. Procter & Gamble is going down, as you can see. It was nearly 94, now it is 72. This is doing better. UPS is doing bad. It was 135, now it's 113. And the last one is Verizon. You know, it's going up and down. So in this, what I want to show you that I will tell you that Warren Buffett, he is looking for the long term. He buys a good company according to what it produces, what are the services, and has it a powerful competition against the other companies. He said it always. For example, he said, I buy Coca-Cola because there are billions of bottles sold each day all over the world. It's from one company. Even the people who are in the jungle, you will find bottles of Coca-Cola. So Coca-Cola is very famous even in the primitive tribes of Africa or jungle of Brazil or in Asia or all over the world. You find bottles of Coca-Cola. So it is very famous. It is very powerful. It makes a lot of money. And this is why he chooses the best companies in the world. You understand that? But Warren Buffett, he is not making money from that. He is making money because his portfolio, he is getting, as I showed you in videos about Warren Buffett. If you didn't watch them, you should watch them. How Warren Buffett has made his money. It's because of the partnership he has done before. He has made all this money. If he has his own stocks, he will never achieve as he does now. I have explained into details into Warren Buffett list of videos. If you are interested, no, I'm not speaking. Brian Loveless say, Kareem, Africa is not permitted. No. I'm speaking about the jungle in Africa. Okay, I'm not speaking about countries. I'm speaking about people who are living in the jungle. Okay, or people who are living in the desert. This is what I'm speaking about. Like in you understand my my point is that you find someone who is in the jungle, but he can go to a store and he can find Coca-Cola and he buy it and you drink it. Although his life is so different from the modern life in Europe or America or Japan or Australia. It's so different. But I understand that when you say Coca-Cola, it is a name, a brand name that it is known all over the world. Even you go to Eskimo, okay, in the North Pole, they know Coca-Cola. Okay, that's the thing I'm speaking about. So Warren Buffett buys good companies, successful companies. He doesn't buy The only thing he buys which is bad, it was bad at the time, is Bank of America. Bank of America was collapsing, especially in 2008. And I told you that Warren Buffett has bought it, and after he has bought it, he told people, I have bought it, so the people, they buy it. This is psychological. And it goes from $7, now it is $31 or $32. I even showed you when he buys, I think in 2010 or, I don't know, I have made the video. If I find, let's see, Bank of America, if I do the years, I will show you when he buys it. Yes, I think he bought it in 2009, here or 10. Okay? After the 2 years, the company, in 2007, 2008, we have the financial collapse, especially 2008. So when these banks, they collapse, and he comes and he buys from the low and he tell people. But right now it is $30. But it was only like, I think he bought it when it is $7. $7, it could be here, it could be 2011 or 10. I don't know which year, but it is these 2 years, maybe 10 or 11. So Warren Buffett, when he bought it, he told everybody that he bought it, so the people, they come and they bought it. That's why it is now $30. And the government has put money into this Bank of America. They helped this bank to go back because it is one of the biggest banks of America. And you know, the government or the federal government has helped some banks to go back again, although they have lost a lot of money. So this is what I am speaking about. Okay? So what is, you said, so you say he buy on sale, cheaper price than we retail traders. Karim, for Africa, it's true, you can find Coca-Cola everywhere. And you say, oh, okay, thank you very much. It means, understand the Trump, that the market is with emotions. There are some people who just, they use emotions. That's why you see you have bubbles in the market. Sometimes the market goes so good in years, it go down so good in some years. It depends on the news, on the information that it is circulated. And if right now they begin to say that the market will be good, believe me, all the people will begin to buy blindly. Just they find the stock, he buys, and in a few months the market can go back. But understand that in January, all the people, they say 2018 is a good year, but after in February we have the correction. So understand that always we have problems. You say US dollar, it's 199. So what is the stock that it is 199? What is it that you should put? I don't understand why you put this 199. Understand that Warren Buffett, when he buys stocks, it will be a big transaction, and it will be through the company, and it is a lot of stuff because he is a big buyer. Okay? So you donate $1.99. I thought it was $1,000,099. I say it's good, $2 million. I can take them, no problem. Thank you very much. So It's very good. Okay, thank you very much. I don't know that some people will give me money in this live session. I will do it each day, so you just give me more money. Okay, so thank you very much. It's very good that one of the guys, when I put training for free, which is training level 1, he gave me $5. I say it's free. I say okay. I just like that you put it free, so I put $5, which is very good, which is a very good thing. Now, oh, next you will donate more. Okay, that's very good. So make it like $2 million, $3 million, a lot of millions, because the market is going up, and I will put all the money in the market, as you said, and I will do like Warren Buffett. Okay, so the market is going up, so I put all the money, and it will be a very good thing, which is very good. So as I told you, see that even Warren Buffett, in this correction, he loses a lot of money. So it doesn't mean that he knows what the future is or whatever. The good thing, I was searching last week for industries that are going up, and I searched. I found other industries that are going down. So I will make videos for my golden subscribers next week to show them this stuff. At least they have an idea. So Wiseman said, at my grocery store, when Coca-Cola is at big discount, people buy in bulk, not just one, and it disappears off the shelves. Yes. Sometimes they give in, I think in Christmas. In Christmas, they give discounts, and you can find the Coca-Cola with 75 cents. Is it this discount that you are talking about? This is what I saw once. It's like 75 cents for Coca-Cola. It means it is less expensive than water. it's nearly expensive. I don't know how do they make money, but it's not a big deal. Okay, so it's like water, you know. But I don't know how these guys are making their money. It means it's a very good company, and they are making a lot of stuff to do that. So okay. So as I told you, yes, it's around 250, then goes down to $1 or $1. Oh no. See, Wiseman. Yes. Wiseman, you said it's around 250. No. Coca-Cola is $1. I don't know where you find this $2.50. In for example, if you go to Walmart, Coca-Cola is only $1 for 2 liters of Coca-Cola. Is $1, not more. Sometimes it goes to $1.50. Yes. Wiseman, maybe which state are you in? No. I think Costco, I think, is more expensive than Walmart. Let's I don't know about let's say Costco. Okay. I don't find the I find only the 12 pack. I don't find the bottle. Let's see here. So Coca-Cola. Okay. So let's see Walmart. Excuse me. So I don't find online. Ah, yes. In store only. They don't sell it. Oh, this is a 3 liters. Okay, there is no price. Okay, there is no problem. But I always buy Coca-Cola with $1. Okay, and in Costco, I think it's more expensive. 4 bottles of 2 liters are $5, I think. So it is more expensive than Walmart. Walmart is cheaper. You say 135? Yes. Sometimes, you know, sometimes they do it $1.50 and sometimes $1. Right now it is $1. Okay, almost all the drinks are $1. And sometimes in Christmas they put down Coca-Cola to 75 cents. This is what I see. Oh yes, okay, that's good. Canada, I have no idea. I have no idea about Canada. I have never been there. I don't like the cold weather. I like warmer weather than cold. But I like in Canada. I like if there are like gold mines, like in Alaska and Canada. If there are gold mines, yes, it's very good to go there and make some gold. Yes. So as I told you before, the market is not healed yet from the correction. When it goes above the resistance line, this is an indication that the whole market is going up. And for me, I am following some some industries that I see going up, and they are doing good. If the market continues to go up in the future, it means that this will be the first industries to go up, and this is the good thing. Yes, yes. 2 liter is in Walmart. It is $1. Sometimes it goes to $1.50, $1.50. It's always, they change, you know, they change according to the season. Okay, sometimes they put it $1.50, sometimes $1, sometimes they give a big discount as usual. Okay, so that's what they do. Yes, the 2 liter I'm speaking about always. Now, as I told you before, so a disciplined trader begins with rules and finishes with rules. Those people who don't follow instructions, they don't make rules for themselves. they just trade at random. Sometimes they do that, sometimes they do that, sometimes they go to difficult trades, sometimes they find losers stocks and they don't see the chart and they buy them because they are so cheap. I see someone is buying hundreds of thousands of shares of a penny stock, and sometimes he can make money, but sometimes he can lose a lot of money, and this is part of the game. And those people who are into a big risk, they will lose it all at the end. But those people who are, I'm not saying stingy, or the people who look very good, they control very good money, they don't want to do risky thing, those people survive in the market. Okay, they survive because they keep an eye on their money in the market. They don't just throw their money into a penny stock and then they lose a lot of money. So this is the thing about discipline. I think there are books that speaks about discipline in trading, and if you find some books, I think I have made a recommended books to read. If you find this video in my channel, please check those books. You can just read in order to have ideas, to see what's good and what's bad, and to have like an idea about trading. Okay, so I think we are at the end of this session. So for you guys who are into the golden subscription, next week I will make videos about these industries that are going up from the bottom. Some industries are going above the resistance line, some, you know, and some they are very bad industries that are going bad. And if you buy stocks for the long run and they continue to go bad, to go down, you will be losing a lot of money. Because for me, I always look at the industries and the stocks also. Sometimes the stocks are doing better than the industries. These are the leaders. This is what we are looking for always. But it is good to see an idea about the industry. Is it going up, yes or no? Because an industry shows you that there are interest from mutual funds. These mutual funds, if they get an interest on this industry, they buy a lot of stocks. If they buy a lot of stocks, the industry will be going up. But if you see an industry that it is going down, it means mutual funds are selling a lot of stocks. That's why it is going down. And maybe you buy a stock and after a few months, it will be going down and you lose a lot of money. So check the industries very well. Now, KQ. Hello, KQ. I have never seen you here before, but how are you? Do you think paper trading helps improve? I always make money paper trading, but lose money when using real money. that is very funny. Now, paper trading is you don't feel anything about the money. I will give you an example. Maybe you have done this before. Okay, so just stay with me 2 or 3 minutes. I will explain into this explanation. Okay, look at this example I give you. Now, let's say you go in paper trading, you find a stock. It's called X, let's say XZY. Just an example. This is the company. You bought a stock at $20. And this is the buy point. It means you buy at $20. Now, let's say you just leave the stock. Okay? It goes up, it goes down, and then it goes up after, okay, it goes up like this. So good. Okay, good. And after, let's say after 1 month, okay, you find that the stock is $20, now it is $30, and you make money. Now when you do this in virtual, okay, if the stock goes up or goes down, you don't feel anything. Don't feel anything. Because you say to yourself, it is fake. Always you say to yourself, it's fake. So you don't involve yourself in feeling. You don't involve. You are not sad and you are not really happy. Because even if you are happy, you want to be happy, and then you say to yourself, oh, it is just fake. So you are not happy. You are not sad. So you make money because you don't feel anything. Now let's see, you buy this stock in real next week. Let's say the stock is $20. Let's say it goes the same as $20. Now, if you begin making money, you are good, you are happy. But if you begin to lose money and you don't put stop loss, you have a feeling here that tells you that there is hope. That, as someone told me before, he told me, if you sell your stock, that means that it is real. But if you don't sell, it means it is not real. I say, how? So I begin to laugh at this guy who was explaining to me how is real or not real. I say, if you buy a stock at $20 and now it is $2, $2 is not real for you? And when do you sell? If it is from 20, it goes to $2. Now this is, you have a feeling. Now this feeling, what does it mean? It means a hope. You say to yourself, I don't sell right now because it goes down, but I leave it, maybe the stock will go up again. But unfortunately, it doesn't go up again. So this is what happened to you in real. In real trading, you involve yourself with feelings. In order to not have feelings and to trade very good, you should make rules. You should have to make rules, to follow rules. You buy at $20, you should have a stop loss, the loss that you should exit the trade and not to exceed that. Let's say you buy the stock at $20, you put 19.50 cents as an example. If the stock goes down to 19.50, you exit. So how much you lost? You lost $50 in 100 shares. So here you control your loss. It means it's a very good idea. But if you don't have a stop loss, you don't have no rule, you begin to have a feeling of hope. And you leave the stock going down, 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 until you lose thousands of dollars from your thing. That's why you don't succeed in real trading. So in order to succeed in trading, you should have a training and you should have a real rules. You should have rules in your trading, and this is what I teach. Okay? So KQ, you should continue with the paper trading. When you begin with real trading, ask yourself, have you a strategy? It means, do you know how to pick stocks, or you have a strategy, you have rules? Do you know when to buy a stock, for example? How to put stop loss? How to follow the trend? Do you know how when to exit with the profits? For example, you have profits. When to exit? What is your criteria? Do you know how to manage your account, the whole account? All these you should know before you trade. That's one of the most important things. Thank you, Q. Q, if you are interested, you can get the first training is for free. Please Go to my website. You find the first training, which is for free. Please take this training to see my strategies, how it begins. And then if it is good, you can go to subscribe to Golden Subscription, or you can just buy or order any training that you like. Okay? So here is my website and my email. If you have any questions, please send me an email and I will be happy to help you. Wise man said, thank you, Karim, for giving us your time. What makes you a good teacher, if not just your knowledge, but what you also makes you a good teacher, you have a good personality for a teacher. Thank you very much, wise man. This is a very good testimonials, and I am very appreciated for what you for being here and for watching the videos and contributing when asking questions or getting answers. We are here to share information and to see whether our information is good in the market. We can make money from it, and that's a good thing. Okay, so thank you very much for watching. It's now 3 hours 35 minutes. I think we finished this session. Please watch my videos, because each day I make a video, I speak about something. If you have questions, always ask questions. You can comment on my videos. You can send me a private message, which is better. And if you have questions, just ask. But if you are a subscriber, you can send me an email and I can make video for you and upload it into Golden Subscription. Thank you very much, and see you next week the same time as this. Thank you very much, and hope to see you next week on Saturday at 9 p.m. Eastern Time. Thank you very much.